That's not the case. So they don't want to acknowledge that warning. Unfortunately, the price is going to be a lot higher by the time they do that. I don't know that 3,000 is going to be enough, or maybe a big drop in the dollar relative to, the other fiat currencies that are out there. I mean, gold's gone up to almost 3,000.
Peter Schiff is back, and he's breaking down what's really driving gold prices. Is this just another rally, or is gold finally going mainstream? He dives deep into the future of gold mining stocks, the outlook for miners, and the big question: will a Trump presidency be good or bad for the stock market and economy? Stick around because you won't hear this anywhere else.
What's driving gold specifically? Is it just the central bank buying, or is there more to the story?
Well, the central banks are a big part of it. And I'm sure there's, other demand, mainly coming from the East. So I'm sure the Chinese public, India, countries like that, they're still buying gold. Americans have been selling gold. They sold a lot of gold last year. They sold a lot of gold stocks. I mean, they've been selling into the rally the entire time. Gold's up about 50%, and they've just been sell. Well, in some cases, it's because they need the money. In other cases, it's because they'd rather use the money to buy tech stocks or to buy Bitcoin or MicroStrategy or something. So they're either gambling with the money or they're using the money to buy food. It depends on their circumstances. Yeah. But there isn't a lot of investor demand or demand for gold, in the general public. They don't understand gold, and so they're not buying it. And if they own it, they tend to be selling it. Now, of course, that's not true with everybody. I mean, there are plenty of people who still believe in gold and still buy it in the United States. And I think more and more people are going to start embracing it again. Unfortunately, the price is going to be a lot higher by the time they do that. I don't know that 3,000 is going to be enough. Yeah. Maybe 5,000 will. Who knows? But whatever that point is, we're going to find out because gold's going to keep going up. Maybe it's going to take a big crash in Bitcoin to kind of wake people up to the difference. Mm-hmm. But or maybe a big drop in the dollar relative to the other fiat currencies that are out there. I mean, gold's gone up to almost 3,000 in an environment where we've had a strong dollar, which is normally a headwind for gold. Yeah, and I think the strong dollar has been a headwind because gold would be a lot higher than 3,000 if the dollar was weak against other currencies. I mean, it's weak in terms of what it will buy you, but it on a relative basis, the pound or the Canadian dollar, whatever, have been even weaker. But that will turn around, and we will start to see the U.S. dollar falling in relation to those other currencies, and that will really kick this gold rally into a whole new gear. And again, the mainstream media dismisses the rise. They try to come up with some reasons that it's going up. Well, the financial media wants to, push the narrative that everything is great, that the stock market is great, the bond market, the economy. So, gold is saying that that's not the case. So they don't want to acknowledge that warning. So they dismiss it, or they try to come up with another rationale for why gold is rising. Oh, it's all the geopolitical uncertainty, right, so don't worry about it. It's not rising because the Fed has got monetary policy wrong, or because there's a debt crisis coming, or inflation is going to rear its head in a bigger way, right? No, don't worry about any of that. And of course, Wall Street doesn't really make a lot of money in gold. They make money when they're managing your stock portfolio or you're trading stocks, and they're charging you commissions and stuff like that, or they're lending you money against your stocks so you could buy more stocks and they could charge you interest. So they don't like it when people just buy gold and take their money away from that system and just put gold bars, in a safe, right? They don't make any money off of that. They don't like it. I mean, I make a little money off of both. I mean, I sell gold. I mean, we have a company, Schiff Gold, and people buy gold and silver from me. I make a lot more money when they give me their money to manage at Europe Pacific Asset Management, but that doesn't stop me from telling them to go buy gold too and buy silver. I think people should have gold and silver, but not with everything. And I manage portfolios. Now, some of the portfolios we manage are mining stocks, so we do that too. And I think the upside potential there is enormous. Now, I've thought that for quite some time, and I would have been better off in general just buying physical gold. Physical gold's gone up 10x since I started buying mining stocks 20 years ago. I got a few mining stocks that have gone up 10x, but most of them haven't even come close to that. And on average, if you look at all the gold stocks I bought, had I just bought, the best ones, the ones that did the best, yeah. But I mean, in hindsight, I didn't know that. I was, being more diversified. But I would have been better off just buying physical gold. When the analysts that cover these gold stocks just don't believe in the rally, and when you look at, their earnings reports, like I was just looking at one the other day for Barrick, the assumption for the gold price that the analysts use to try to, make a forecast on Barrick's earnings, which obviously would be something that would help determine what you should pay for Barrick, what the share price should be. It's based on an earnings outlook. Gold is at $2,900 an ounce, yet their assumption for 2025 is $2,650. But what gets worse, if you go out to 2027 and you look at what their assumption is for the gold price, it's $2,400. So
really?
They assume that the price just turns around and falls for the next 3 years.
Right.
They ignore the fact that it's just gone up so much, and they just assume that it's going to go back down. But they assume that the cost of mining is going to keep going up.
Yeah.
So it's just that the gold that they're mining. So if that's your outlook, if you think mining is going to get more expensive, but gold is going to become cheaper, you're not going to be recommending these gold stocks. Realistic outlook, where's gold going to be in 2027? Maybe 4,000. I mean, that, to me, that's a better guesstimate than 2,400.
Right.
And so if you start putting those kind of numbers into the price, and yes, I think the cost of mining will also go up, but not as, proportionate to the rise in the price of gold. So these stocks are very expensive. I think they're really trading at single-digit multiples right now. It's paid dividends over that time period, so you could have reinvested those dividends, and but the stock price, and that's because they've done tremendous acquisitions. I mean, one of the reasons that I have a lot of Barrick myself, it's not my biggest position, but most of the Barrick I own, I didn't buy. I owned the companies that Barrick bought. That's how I got the stock.
Oh, nice.
I probably had at least half a dozen stocks that were bought by Barrick, owned. I mean, a lot of my stocks got bought out by Barrick. They got bought out by Newmont. They got bought by even Agnico Eagle or Silver Wheaton. I forget. Yeah. I mean, I have these positions in the larger companies, but a lot of the stock I got because I had smaller companies. So that's helped me. Like I've made money in Barrick because I made money in the stocks that Barrick bought. Right? That's real, because I got premiums every time they bought a company, right? The shares that I had, I got a premium to where those shares were trading when the company got acquired. Now, how would I have done? Would I have done better if Barrick never bought all those stocks and I still had those companies? It's hard to say. Where I'd be. But I remember, like, I was just talking, I did a podcast last night looking at Australia. I used to own, in Australia, I used to own Lihir Mining. I used to own Newcrest Mining. They're gone. They got bought out, I was like, found one. I still own Golden Star, which was one that I still own, which had made a 52-week high. But I think the consolidation in this sector is going to really pick up.
I agree.
I think that what the bigger companies are going to be doing with their cash flow, is buying out the smaller companies and then buying some of the exploration companies to the extent that they've actually got, a viable, property that they're developing because they're going to want to get more reserves to replace what they're mining. But rather than spend money to go out and find new deposits and develop new deposits, I think it'll be a much better use of their money to just buy out existing companies. But of course, also, they're going to be buying back their own stock, which is one of the reasons that the gold supply is going to be very constrained for many, many years. Because when the price of gold goes way up, the gold companies are not going to go out and look for more gold. They're just going to consolidate and buy up each other. That's going to be cheaper than going out and exploring and paying all that CapEx to try to, find more gold. So it's just going to be the gold that already exists kind of getting bought up.
If you want to stay ahead of the curve, hit that like button, subscribe, and turn on notifications. Peter Schiff never holds back, and neither should you.